Buckle up because this is the single most important federal change to hit HOAs in 40 years, and almost nobody in the HOA ecosystem understands what's coming. The automatic full review, August 2026, the moment the federal government stops trusting HOAs and starts verifying them. Beginning August 2026, Fannie Mae and Freddie Mac will automatically trigger a full review on any condo or HOA loan file that shows signs of financial instability. This is not optional. This is not manual. This is not based on board disclosures. This is algorithmic risk detection built into the federal mortgage system, and it changes everything. What is a full review? The lender's deep autopsy. A full review is the highest level of scrutiny Fannie Mae and Freddie Mac apply to condo HOA loans. It requires lenders to verify financial stability, reserve contributions, reserve balance, percent funded, operating deficits, special assessments, delinquency rates, cash flow stability, physical condition, deferred maintenance, structural issues, life safety repairs, uncompleted projects, inspection history, insurance solvency, master policy coverage, exclusions, deductibles, non-renewals, and pending cancellations, governance and legal, litigation, board disputes, fraud indicators, mismanagement patterns. Before 2026, lenders only triggered a full review when something looked wrong. Starting August 2026, the system assumes something is wrong and forces lenders to prove otherwise. Why the automatic full review exists? Because the HOA ecosystem has a structural blind spot. HOAs are required to disclose documents, not conditions. They disclose snapshots, not real-time status. Fannie Mae and Freddie Mac finally admitted HOA disclosures are unreliable. Reserve studies are outdated. Budgets are projections, not truth. Boards hide deficits. Management companies curate information. Homeowners don't know what to ask. Lenders are being blindsided by collapsing buildings and insolvent HOAs. The federal government is no longer willing to take the HOA's word for anything. What triggers the automatic full review? Here are the exact red flags that force the system to escalate the loan. Financial red flags: reserves under 10% funded, operating deficit in the last 12 months, special assessment issued or planned, more than 15% of owners delinquent, reserve contributions below industry minimums, negative cash flow trends. Maintenance red flags: deferred maintenance backlog, uncompleted structural repairs, life safety issues, water intrusion, concrete spalling, elevator failures, roof failures. Insurance red flags: non-renewal, force-placed insurance, deductible too high, exclusions that make the building uninsurable. Governance red flags: litigation, board turnover, fraud indicators, missing financials, inconsistent ledgers. In any of these appear, the loan is automatically escalated. Why this will blacklist thousands of HOAs? Because most HOAs cannot pass the full review. 70 to 74% of HOAs are financially underfunded, and the full review requires adequate reserves, no hidden deficits, no deferred maintenance, stable insurance, clean governance. Most HOAs fail multiple categories. This is why the industry is panicking. Why your HOA will be blacklisted. When Terry Bontemps ran his HOA through HOA TrueView, the platform exposed massive reserve underfunding, operating deficits hidden in summary-only reports, deferred maintenance never disclosed, insurance instability, inconsistent financials, missing documentation. These are the exact triggers for the automatic full review. Terry's HOA is the textbook example of what Fannie Mae and Freddie Mac classify as critical, structural, and financial risk. Under the new rules, lenders will not approve mortgages. Buyers will not qualify. Property values will fall. The HOA becomes unfinanceable. This is what blacklisting means. Not a punishment, a risk classification. Terry's HOA is already in the danger zone. The new rules simply make it official. The system level impact. This is the part nobody understands. The automatic full review is not about condos. It's about protecting the U.S. mortgage system from collapsing buildings, insolvent HOAs, deferred maintenance, insurance failures, unpriced risk. The federal government is saying, hey, if HOAs won't tell the truth, we will find it ourselves. This is the first time in history the mortgage system is stepping in to correct the HOA transparency crisis. What happens after January 2027, the second wave? January 2027 introduces mandatory reserve verification, mandatory maintenance verification, mandatory insurance solvency checks, mandatory documentation audits. This is the full federalization of HOA financial truth. HOA TrueView becomes the only way homeowners can see what lenders will see. The bottom line, the automatic full review is the moment the HOA ecosystem loses control of the narrative. Boards can no longer hide deficits. Management companies can no longer curate information. Disclosure packets no longer matter. Outdated reserve studies no longer matter. Filtered financials no longer matter. The federal government will know the truth because lenders are now required to find it. And HOA TrueView shows homeowners the same truth before the lenders do.